How's it going, everybody? Welcome to Chart Request Live. We do this every Thursday. I am your host, Steve Straza, here with my esteemed co-host, Patrick Dunawilla. What's up, Pat?
Hey, how you doing? Last CRL of August, you believe that?
Are you sad to see it go?
No, actually, Jonathan just pointed it out in the chat, and it's a good point, man. This summer just flew by. It seems like every time you hit 4th of July, and then the rest of the summer is just a wash.
I mean, I'm not particularly sad about CRL. We'll keep doing this, but
that's true.
The summer ending is a bummer, always.
You know, this is low-key my favorite show, so let's do it.
All right, so I think we got some. We came in today with some requests. Why don't we start?
We sure did. We got some in our inbox, and just so you guys know, you can always email us at info@stockmarkettv. Is that correct, Steve? For ticker requests. We'll get the email up for you in a second. But let's start.
It's something else. We'll get it. We'll figure it out.
So interestingly, a lot of the requests in our email were a lot of commodity related names. So let's start off with a couple coal names. Arch. I know you love your coal names.
You said Arch?
Yeah, Arch Coal.
Yep. So the situation with these coal stocks is the same when you zoom out, but very different when you zoom in. So let's zoom out first. Throw up a weekly here. Nice structure. I've been using these arcs lately. You ever use these arcs, Pat?
The actual arc tool?
Yeah.
You know what? Ever since you mentioned it the other day and you were complaining that an arc needs to be an actual semicircle, I've started using that tool.
Yeah, me too.
I don't know how I feel about it yet, honestly.
It's all right. At least they have it. So this is the situation for most coal stocks, right? A huge rip off of this base back in 2020, right? This is the COVID lows. Took off. I don't know why it says ARC. This is Arch. I was probably having some fun overlaying Arch and Arch. But then it's been really straight sideways, really digesting gains for almost 2 years now, depending on the name. So something like Arch, I don't like as much as some other names that I believe were also requested.
Well, we got one, CEIX. I know that one's a much nicer looking one.
So like with Arch, and you'll see what I mean when we get to CEIX, you really want to see, you know, this consolidation kind of completed here. You know, you could draw a little down trend line here if you want, but you want some sort of resolution from this consolidation before you get involved. CEIX, a nice contrast because it's already doing that, right? So when we zoom out, it's very similar,
nice
right?
Chart.
Yeah, so you got that nice big base off of the COVID lows. Let's just draw it out so everybody can see it here. Use this beautiful trading view arc again. Boom. I don't know. I got to get better at this. And then we got another one here, right? So this is really the pattern that we're after here. Look at this.
Base on base.
Base on base. So we get the base breakout just back here in June of last year, right? Take out these highs from 2018, which is really a big, 2018, early to mid 2018 is when a lot of cyclical assets peaked during the last cycle. So we took out those highs. Okay. Started consolidating above them, right? And then just recently, over the past few weeks, if we zoom in here, right now we're resolving higher from this next little basing pattern here. What I would first do on something like this to look for levels, I would fib the whole pattern, the whole structure. I would fib it out like this.
Start with the major one, right? Start with the big base first and then deal with the smaller ones.
Exactly right. And this gives you pretty much what you need here, right? So you know where you're long, right? You're getting in above these pivot highs. So this fib 161 comes in conveniently around 77. The pivot highs, if we zoom in here on a daily, would come in around, just below 80. So that level works. Also gives you a nice little cushion. to use as a stop loss. And then the next target here is 122. So that's a big move, about 50 points of upside from current prices. Or
Yeah,
40.
a beautiful looking chart. And it's already starting, the breakout's underway, right?
Yeah, we're going. And the other one too, I'll just honorable mention since we're here, right? There's two coal names really that right now stand out more than any others. CEIX is one of them. So great request there. And then AMR is the other one, right? So similarly, we came up here, came off this base at the COVID lows, came up. This was real tight. Just chopped around in this little continuation pattern since second quarter of 2022. Now we're breaking out, so we would define our risk right at these pivot highs, just like CEIX, and that level's just above 180.
I like it. And hey, when are they going to give us the base on base acknowledgement in the CMT curriculum?
We'll get it in there before we die.
I mean, that's a bullish pattern, right? Just the fact that things consolidate on top of a breakout like that. The breakout isn't failing. It's just building up energy to keep going, right?
That's
it. So let's move on to another couple of FinTwit's favorites. QSR. I believe that's Burger King, right?
Restaurant brands?
Yeah. And hey, Steve, if you could go into your settings and turn on the watermark, just so we know what ticker we're looking at. QSR. There you go.
Good call. Okay. I don't know, Pat.
That's a tricky one.
Rangy, right?
Yeah, getting rejected an awful lot.
So here it is. Really, since mid 2019, we've just been stuck in a massive range. I don't really like how big this range is either.
Since 2019, basically since before the pandemic, right?
Yeah. So
hey, do you remember how well restaurant stocks were doing up until the pandemic? You remember that? You went on Real Vision, you talked about Wingstop, and there were a bunch of them, and then all of a sudden the pandemic hit, and I think that did a lot. But then they took off again when they realized that they had takeout.
I do remember that. I mean, here's how I would do this, right? If you're just itching so bad to get some action in Burger King, you have a level of interest here, right? So treat these as false starts, right? The September 2019 move as a false start. You got these highs from 2017, 2020, 2021, again, late last year and early this year. Just came right back. Hard sell-off, really, over the past few weeks, right? So came off since the mid-July highs around 80, came off more than 10 points here, and really dug in and found support exactly where we would have expected this to find support, right? Buyers showed up right at these pivot highs from late last year, early this year. So I think you could use that level for now, but you don't get the all clear until these pivot highs are taken out, right? Above 78, I start to really like this, but that could take time, right? Because this is a pretty big range. We've been chopping around in it for some time. There's some good price memory up here. So above 78, you get the all clear. Path of least resistance is higher. Between this 70-ish zone and 78, probably still messy, but tradable.
Yeah. It's funny before you had zoomed out, it just looked like a retest of a base, but then you zoom out and you see that it's still within the base.
Yeah.
But Steve, by the way, what is this left axis you got going on here? We got to get rid of that.
No, you know what that's for?
What is that? Were you doing an overlay?
No, it's because I'm doing overlays all day, right? So I'll just really easily throw.
Okay.
Here.
Okay.
So I just leave it on, right? So if we want to look, hey, how is Restaurant Brands doing compared to, its competitor Yum Brands? Boom, boom, take off the 200-day.
Yeah, and you're not looking at just stocks. Sometimes you're looking at ratios too. I get it. Okay. That's fair. That's fair.
Good question.
Farhan, I thought it was a little weird too, but
question.
Keeping him honest.
Yeah, no, there's a reason for all of this madness.
Yeah, all right. You ready for the next one?
Can I do one?
Sure. Thanks. But then after that, we got to do Canadian Pacific. That was one from the email. And then we'll get to some of these in the chat. So keep on pumping out these tickers in the chat, guys.
You want to talk about some other things I keep on my chart. This up top here is the 1 week rate of change.
Yep.
Okay. Hot stocks going for the gold. best week ever, maybe. What, another 3% tomorrow, right? Because we
How
still
many
have
times
a
have
day
we
to go
seen
here.
this story, Steve?
We still have a day to go here, Pat. I'm just saying, it could be the best week ever for these pot stocks. As if, I mean, who know? Who knew? I think the news this week is that the government is descheduling marijuana. They've been talking about this for 10 years. Like
How many times have you heard that though already?
I'm just saying, I had no idea that marijuana wasn't as dangerous as heroin and crack cocaine. But I'm really
It's all
glad.
news to me, man.
Yeah. But no, these stocks, they are ripping. It does look a little different, and I'm with you, Pat. I'm with you. You get these big moves from pot stocks. They never last. They never materialize into anything. One day they might, though. First
Yeah,
of
and
all,
at the same time, that's the kind of sentiment you want
yeah,
in a kind of
right,
reversal like this. You want
right,
people to just be like, "Boy who cried wolf," like, "Okay, yeah,
right.
keep talking, Steve." Like
That's where we're at. First
that's what.
overbought rating since February 2021. That definitely stands out. Okay, well, let's move on to the requests now.
Are you ready for more?
Yeah.
All right, Canadian Pacific Railroad. Another one you liked back in 2019.
Speaking of Real Vision, huh?
I know. We're really making a 2019
I think
reassertion. We're reasserting the 2019
maybe
leader.
the viewers were looking up our Real Vision hit reels,
Yeah, right.
requesting all our old stocks. All right. So no, we're laughing because this is another one that we did.
Oh my goodness.
What a wow.
What a crazy, heartbreaking chart.
I like this a lot, man. This is good.
Again, another boy who cried wolf thing where it's like, okay, it's going to break out, right?
I mean, this thing has been dead sideways for 3 years, coming off just a massive run off the 2016 lows. Stock quadrupled, right, from 2016 lows to the early 2021 highs. Now straight sideways, digesting those gains. Let's figure out where to define our risk. I could tell you, I'm going to want to do it right here at these pivot highs of 82. Let's see now where the fibs come in, because if I
I
were
would bet that massive consolidation is taking place somewhere at a fib from that 2016. Yeah,
yeah,
there
you
you
cheated,
go.
but you definitely cheated. No,
Oh,
but
I
it
mean, hey, do
happens
you
that
think
way all
at
the
a
time.
certain point you start to see Fibonacci ratios like
Yep.
without actually drawing the grid?
Yeah, you know where they're going to line up sometimes.
Yeah.
I'm with you. Look, this is a great chart. Got the base breakout. We chopped around a little bit around the COVID times, really ran off the COVID lows, hit the second Fibonacci extension. We're above this, 8350 level or wherever you want to define these pivot highs all day, long to 123. These stocks are working. Industrial stocks are really hot. Truckers, railroad companies. I saw, my personal favorite in that industry group, Old Dominion Freight Lines, on the new highs list the other day. These stocks are starting to break out, the strongest ones at least. And CP, I think, is very much in that category. What do you need? Another 3 points of upside here, and you get that breakout. So put this on.
Hey, on a kind of unrelated note, did you see that company Yellow went out of business? It's a trucking company.
I did. I heard about it.
I was trying to figure that out because you see all these other truckers breaking out and doing really well. A lot of industrials doing well, like you said. And that was just like, was that a company issue? I mean, we can figure that out later, but
I know nothing about it. I have no
yeah.
color there.
Anyway, all right, let's get to some of these in the chat. Like I said, a lot of commodity names being requested today, but let's take a look at Cane. That's the sugar ETF, very appropriately named.
And just as a programming note, guys, it is questions@stockmarketmedia.com. Pat, I get it confused too because it's info@All-Star Charts.
Okay.
Stock Market Media. So,
And you can always call Mary.
Just call Mary. She'll make sure you find where you're looking.
Right.
All right. So Cane, this is funny because I was thinking today, what happened to that fund SGG? There used to be a
right.
fund SGG.
It's not there anymore?
Was it just renamed Cane?
It's possible. This is a Tecurium one, right?
I couldn't find SGG. I know that used to be a fund, or at least it was an exchange traded note, I believe. This one's probably different. I think that was delisted. Here's the thing, right? Cane looks fine. If you have to play it through this vehicle, if you're not comfortable trading futures, it's doable. It's not optimal. It's very suboptimal. And I'll show you why. Let's overlay Cane with sugar itself. Because theoretically, they should track. right? Should track.
There you go, bringing in that left-hand scale there.
That's right. See, we need this.
There was a reason the whole time.
But here's the problem, right? We're looking at Kane here saying we're still not above these October highs. Kane is in the candlesticks here. Sugar futures are in blue. Sugar futures blew through those highs, right? Like the charts don't, the fund doesn't track the underlying futures well enough. And you see that a lot with these commodities funds. In fact, this one's actually better than most. This doesn't look terrible, but I guess, to my point, sugar futures back towards these highs from 2012, Kane nowhere's near them.
Right? Yeah, and I've been seeing a lot of these commodity related ETFs, not just here in Chart Request Live, but in the social media work I do with the Buzz, noticing a lot of timber ETFs. And I know this one showed up too. Kane has been taking off. I don't know. Is there an OJ ETF? Is there an orange juice ETF?
I don't know. But what I would do if you're trading the ETF, Kane, right? Use sugar futures to get in and out, right? I'm not going to give you a level here, but I don't think it really matters. Okay. What I will do is tell you, hey, if sugar is holding above these old highs, here we go, right? So you got the 2015 highs here. Man, really got to zoom out. Right?
And Steve, that's just good advice more broadly, not just for sugar, but for any commodity related ETF or any leveraged ETF you do, always do the analysis on the underlying and then translate it to what you're trading.
So here's how I would do that, right? You want to trade Kane? Fine. Be long Kane if sugar futures are above 24, these 2016 highs, right? And take profits when sugar futures get to 35, those 2010, 2011 highs.
Even if Kane is not at those respective highs, right?
The charts don't look similar enough. I just overlaid them to show you won't have signposts where you could say that.
Right.
For example, Kane is not above its 2016 highs yet. But my point is, ignore that. Because of the role and because of the mechanics of the fund, it's not going to track the price perfectly. It will give you the exposure you want. Say sugar futures are up 100% over the course of your trade. Maybe you make 80, 90, like whatever. It's a vehicle. It'll get you there. It's not going to be perfect. But my point is, like, I would use this chart here. Say if we're above 2016 in futures, okay, I'll be long Kane, and then I'll be taking profits in Kane once sugar futures get back to those old highs. Where Kane's going to be, I don't really know.
Yeah, I think that's a great point. And, John mentioned in the chat here that he can't trade futures directly, so he has to use, ETFs like this to get exposure to these.
Totally understand. There's compliance issues for a lot of people too with futures trading. I get it. It's a vehicle. It'll get you done. It'll work for a bullish bet on sugar. Just use the futures chart to kind of guide you.
That is excellent advice. All right. Dan the Man requests CSL. Is this the CSL Plasma, the healthcare company?
I don't know. What's that?
It's kind of like DaVita Healthcare. It's like blood plasma. I think like people can donate plasma.
Oh wow, yeah, big.
It might not be the same. Oh no, this is Carlisle.
This is Carlisle.
Yeah, CSL.
Carlisle CG. Carlisle.
Oh, okay. What is this? CSL.
All right, let's check. Health tech.
Yeah, okay. So it's probably what I'm thinking.
Yeah, I've never heard of this. Bearing segment provides plasma therapies. Yeah,
CSL Plasma.
Yeah, okay. Based in Australia.
Wow.
1.3% yield. $130 billion company. All right.
So yeah, they're huge.
Big ADR.
A friend of mine, a family friend, he's the preferred builder for them. So every time they need to build a new place, they call up my friend Gordy and they say, Gordy, we need a new building. Can you build it for us?
So structurally, it's a nice chart, right? Straight higher over the long run, but over the past couple of years, really messy here. Super rangy. Right? We got to get out of this box.
And that goes back to pre-COVID, right?
Yeah, this is COVID. Like
Wow.
COVID never happened for this company.
That happened within the consolidation. That's pretty impressive.
Yep. I remember DaVita was very strong through COVID too. It was popping up on our COVID list.
Because people
really,
have to get those treatments. Like they have to, you can't just like skip your dialysis. You have to go.
yeah, no, I understand that much. Look, this is a total mess. Super rangy. You see the sideways or flat 200-day moving average. If I bring in momentum, we're overbought, we're oversold, we're overbought, we're oversold. Big mess here. Let it resolve this range.
Yeah, I think
Nothing to do.
that's pretty good. All right, so another one in the chat. Let's do SCCO. That's a copper name, right?
Southern Copper Co. I love it.
I feel like this one gets requested often. No?
Good, it should.
As it should. Okay. And that comes from Jonathan.
Hey, John. All right, SCCO. Let's get this up here. This is a pretty one. I know we got some fibs on this guy, so I'm going to zoom right out.
And Farhan, I'm getting to you next. Hey, Orlando, you stole mine. That is a nice looking chart. And it's funny because copper itself, really, really nothing to write home about.
No, copper's been weak. Copper's been a total bummer.
Nobody has asked about Spotify yet, but we will try to get to that one.
Look, with something like this, I don't like where the fibs are lining up. Let's just look at a daily. It looks like we're getting some sort of a resolution here. Zoom out a little bit.
Now you're in the daily?
Yeah.
I like it when the bases have like a head and shoulders within them too.
Yeah. So this is what Patrick's talking about.
It's like an angel or something, or Arun likes to call it a shrugging emoji, the little shrug guy.
Yeah, so technically you wouldn't call it a head and shoulders, right?
Right.
This is what Pat's talking about.
I get, I think it's some people like to get really picky with head and shoulders, and they'll get triggered if you call something a head and shoulders and it's not. The point is, it's an accumulation pattern. It's similar to a rounded base or something like that.
But the essence of the pattern is different. You wouldn't call this a head and shoulders because a head and shoulders is not an accumulation pattern. It's a distribution pattern, right? So for this one, I would get a little bit picky on it. I would say, no,
right.
You can't really call this a head and shoulders. Head and shoulders has to be a reversal.
Okay, right? I get, first of all, inverted head and shoulders. So I misspoke. But that's another really good point. It happens at the end of a trend. That's a really good point.
This is a continuation pattern. A head and shoulders is always a reversal pattern.
Right. That's a good point.
But the point remains that we got these pivot highs here. Say call it 82, like 82, maybe 83 if we're above there. This one's getting ready to scoop and score. I'm going to remove
scoop and score. There's another one that needs to be added to the CMT curriculum.
Yeah, because
scoop and score. You got, we got plenty of fun ones. Base on base. We got some others. We'll start in notes.
This score is the best one. This is like the way this works is the more times the level is tested, the more likely it is to break, right? And we've seen test after test after test since early 2021 at this level. Every time buyers, send prices back up here, they're absorbing more and more overhead supply. So this is clearly a level where supply has outmatched demand over and over and over and over again. But every time we run up there, we take more and more of that supply off the market, right? Now, the fourth or fifth try, and we got the shake pat, right? You always want to see a good shake before we go, right? So you got a nice little false start, failed breakdown, and now maybe we shake higher. The squeeze could be on for Southern Copper Co. I think you buy strength all day in this one above 82. I might be doing the same.
Okay, I like that. So actually, I think we might have had it wrong. I think it was CLS. Yeah, it was CLS.
We're over here looking at.
Right, we're just charting random stuff.
All right. Oh, wow.
Oh, wow. Okay. That made a big difference. Look at that.
This is all we got, though? Oh, okay. Here we go. So,
Celestica?
I'm getting electronic components. This could be a semi.
Yours looks a little different than mine. Are you? You're not on dividends, are you?
Nope.
Okay. Never mind.
Supply chain solutions.
What do you think?
Interesting. Toronto.
Almost looked like a semi name at first.
That's what I was thinking. I think it's electrical components and distribution. So I would draw this one like this. You got a pretty clear level right here at these 2018 highs.
Okay, they're an OEM? Could that be right?
Nice. Draw a nice big arc here. Got the breakout. We fib it out. See if it gives us anything. Yeah. Hey, look at that. That's it. First target hit at the 161.8% fib just recently. Chopped around for a few weeks just here in August. Now we're resuming higher, right? This is what I'm talking about, this little coil right here. First target hit, got a tiny little coil, digestion of gains, and now it looks like it's ready for another leg up. I think we get to find our risk right here at about 22. You have the pivot highs from early August there, late July. And if we're above there, next stop, 34.
I like it. I like it. So we got it. What's that?
It's a pretty chart. It's a really nice chart.
Yeah, I agree. So let's do ENPH and then we should start wrapping it up soon, right?
Yeah, I going golfing.
Joey says, what happened to WWE? What happened?
Didn't they like sell the company or something?
Ooh, retesting that base pretty hard. That one's worth taking a look at, actually. Let's take a look at WWE.
Well, there's news here. I don't want to talk about not knowing the news. Hold on, let me check.
Okay. Yeah, for sure.
Because there's obviously some movement here today. They were working on some sort of a deal.
That's true with was it, I forget with who, MMA or something. I mean, it wasn't earnings related. They released earnings August 2nd. Saudi Arabia. Investment in UFC competitor. Oh, okay. Well, I mean, it's just retesting that base, really.
WWE has put a lot of...
Pull up the chart if you could.
Okay, so World Wrestling shares slammed amid Saudi Arabia investment in UFC competitor. So the Saudi Arabia investment fund that I think is doing things with WWE.
Man, they're just taking over sports. First golf, now this.
Yeah.
But zoom out and go to a weekly. I want to show that base.
So at this point, you got to look at WWE with Endeavor Group, who they're teaming up with. So big sell-off today, about 11%. Pat wants to see the base. Right back to those old highs, really. Right?
Yeah, just retest. I mean, but that is a beautiful base, right? And we've retested it before, it looks like. So that would be a very disappointing thing if that failed. And it would coincide with a trend line break. If that thing breaks, that's done.
So they're merging with these guys, EDR. And I don't know who survives, like what the stock will be in the future, but either WWE is gone or this EDR is gone. So I don't know. This one's like a complicated situation. I'm not going to outline any levels or tell anybody to go do it. Like I said, they're in the middle of an M&A deal and moving on Saudi money going somewhere else. It's, you know,
it has a void written all over it.
This was a stock I loved and talked about a lot. Back in the day, this is one of the strongest names. It was always on the IBD 50 list. I'm talking about right here when we had this run up into the 2018 highs, right? This is when they turned to a subscription model, got away from pay-per-view. Vince McMahon is still famous for it today. It's a Harvard, Harvard business case study, this company, and they really did great things. But I think, the trade to make in WWE happened a long time ago, I'm afraid.
Were you a WWE kid?
Not at all. When I was very young, but I got away from it at a young age too. Yeah.
Well, listen, let's wrap it up now. I want it before we go. I know you got one.
I got one.
And guys, be sure to give us the email address again one more time, Steve. It's questions
at stockmarketmedia.com.
Questions at stockmarketmedia.com. Oh, it's right there below us. With any ticker requests, we'll get to them on Tuesday. If not, we'll get to them on Thursday. But we really love seeing all these tickers. We see a lot of tickers, but we miss certain things. So this is a great way to kind of see what you guys are seeing and kind of share our perspectives. So Steve, what do you got for us?
Before we go, Pat, you love the show. I love the show. It's so much fun, but it's probably more fun even for the viewers because I don't get to pick a chart. From now on, we're picking charts. I'm starting today. From now on,
with our favorites, yeah.
We're both going to pick charts. I don't care. You could send it. We'll throw up the slide, or we'll just punch it in live. For me today, I was going to do grab holdings. We'll wait for next week. We'll wait.
Wait, I got to interrupt you real quick. Joey M wants to know, is that Jeremy Shockey behind you?
It is Jeremy Shockey. Yeah, Jeremy Shockey for sure. Shockey played for both of my favorite football teams, the Miami Hurricanes and the New York Giants. So he has a special place in my heart. When we zoom out on a chart of ConocoPhillips, I mean, this thing looks so good, right? So this is Conoco.
So this is your pick. This is what you brought for us.
Right, because look at the structure here. I'm sorry, I got to clean this up a little bit. Let me just junk all of this. Boom. So look at this structure, right? Got this massive base. Boom, boom.
Almost a 10-year base.
Right. And now it just becomes more a story of, okay, we got this huge structural breakout. Now, how do we get involved? If you zoom in on Conoco, we've really been chopping around and messy since early 2022. Right. And I don't want to wait until these all-time highs to get into something like this. If we drill in with a daily chart, I think there's really something here. Also, the reason why I'm spotlighting this one today is because Conoco is also one of the biggest names in energy, right? So for me, I'm looking to do a short-term trade here. I could play this right through the options market. No problem. I see. Right. Very liquid options market in something like Conoco. Yeah. So really checks all the boxes for me. So here we go. Let's draw a nice little arc here, right? These were the 2022 highs. Boom, boom. Nice little base here. This is good. This is completed, right? And then another one shaping up right here, right? We've already retraced 38% of that move. Now we're going on for 62%. I think you could take this little coil right here, which began back in July. I wouldn't use the fibs here. I think they give you nice guidelines. Use the pivot highs. So Conoco 118, it's really triggering today. 118.50. I think you play it right back to the all-time highs. Right? Nice little trade.
I like it.
That's it.
Well, hey, do we got time for my favorite?
Please. You want me to punch it in for you?
Yeah, I would love to. And you're gonna have to break it down for me. But Orlando, shout out to Orlando Castillo. He actually requested this one too, so it's good. Great minds think alike, Orlando. But it's TT. That's Train Technologies. It's a industrial. I think it was like 46 billion or something. It's not peanuts. Yeah, 47 billion.
Is this aerospace, Pat?
So it says they specialize in heating HVAC, so heating, ventilation, air conditioning for both homes and buildings. But man, I gotta love that massive base that's formed over the past 2 years.
I got you. So you're going to fit it from here, right?
Yep, you got it. You got it. So my level was 203. I mean, you could pick 205, 206.
Yeah, there's really no right answer there for
right.
Someone asked me the other day, where do you start your fib? And
that was me. I asked you that.
So I think what you're probably doing here is closing prices.
Well, and I know what your answer is. You could do both. you can do the highs and lows, and then you do the closing prices, and that gives you a nice range so that you have a little bit of leeway. It's actually better.
Yeah, something like this. I would even look at these 2021, this shelf here, and be like, wow, we ran up to this level 3 times. Maybe this was more of a blow off. I'll just draw right through that and fib it there. So like you said, there's no right answer, right? That's okay too. And if you're unsure, right, and you want to draw one from like the closing and it's going to be like that, then go ahead and draw another one from the intraday, right? And then see how little of a difference it makes over time.
Yeah.
My point, right? Like we're counting pennies over here. 204 versus 206 doesn't really quite matter. I think you said you were using 203, so we'll leave it here at 204. That'll
and throw it in a weekly if you could. Just want to show that prior uptrend that led up to it, you know?
Beautiful.
Yeah, I mean, see, 2-year base within a strong secular uptrend. What's not to love, right?
Yeah,
so I think it could go to 255. Depending on how you drew those fibs, it might be 260 around there.
Yeah, this is a nice chart.
But yeah, Orlando, great eye. I like this one a lot too. It's almost so nice. I think it could fail, but you know I love betting on my failed moves before they happen, Steve.
Yeah, if the bullish pattern breakouts are too obvious,
right.
You know, you shouldn't always
like it.
All right, Pat, this was great. We went 8 minutes over.
A lot of fun, yeah.
So much fun over here. We will be
back.
You
guys. Thank you guys for sharing all these awesome tickers, and they brought some good ones today, Steve.
They did. They always do.
Brought some awesome ones. Yeah,
we are very blessed.
I know
to get these chart ideas from the chat and all of our loyal subscribers and viewers. So thanks everybody for joining today. Thanks everybody for watching. Thanks for participating and recommending tickers. Be back here same time, same place next week, Thursday, 1 o'clock. Myself, Patrick. Have a great day, everybody.
Cheers, guys.